Indian stocks finally breached fresh record highs on Thursday after being poised to do so since late October. The domestic benchmarks raced past previous life highs hit in September last year. The blue chip Sensex 30 index surged past 86,000 points for the first time ever, but closed marginally lower around 85,700. The Nifty posted its best session in 5 months on Wednesday, closing at a 14-month high. The index later retreated to close above 26,200 points. Stocks buoyed by growing conviction in a Federal Reserve rate cut next month and strength in domestic rate-sensitive stocks. This comes ahead of a possible Reserve Bank of India easing next week. Prashant Tapse, Senior Vice President of Research at Meta Equities, said the benchmark's rally to record high levels reflects upbeat market sentiment ahead of the RBI rate decision next week, where hopes of a 25 basis point rate cut are rising. The bull run on Dalal Street has been led by solid economic outlook bets. Also, optimism for a trade deal with the US has also boosted Indian stocks, which took a big hit when Trump imposed 50% duties on exports from the country. The rally was also supported by positive global cues, hopes of a US Fed rate cut next month, falling crude oil prices and steady foreign investor buying. The market mood was upbeat across large, mid and small cap stocks, pushing benchmark indices to new highs. The Nifty gauge has been in a remarkably calm phase. Before Wednesday's surge, the index logged a 77-day streak of intraday moves smaller than 1.2%, which is a first on record. The index has also gone 132 sessions without a single day swing beyond 1.5%, making it one of the world's steadiest gauges. Nifty's realized volatility sits well below Wall Street benchmarks. While foreign investors have returned, domestic money remains at the heart of the current run-up. Despite record high stocks, the rupee was stuck in a narrow range on subdued volumes. Traders noted that a softer dollar and an upbeat risk tone across Asia offered little traction to the currency. The Indian currency has hit record lows repeatedly, with the RBI intervention keeping the currency from weakening significantly too quickly. Still, the RBI governor expects the steady decline to be arrested if a new US trade deal comes through. Mitali Nikor is an economist and the founder of Nikor Associates, now joining us live from New Delhi. Welcome. What do you make of the new highs for the benchmark? Do you think there will be more upside for the rest of this year?
Firstly, thanks a lot, Eric, for having me. And whenever I comment on the stock market, I always try to point out to the viewers that there is a correlation between the real economy and what we see in the stock market fluctuations. And I think this is exactly what we're noticing even in this cycle. We've seen a cycle of record GDP growth coming in the last quarter. In India, we saw a growth of almost 7%, exceeding 7% in fact. And even for the next quarter, it's projected to be 6.8 to 7% by various agencies. And this is also reflecting in the surge in corporate earnings. Therefore, we are seeing these record highs. Therefore, we are seeing this consumer confidence. And we're also seeing that domestic savings are actually making up for a lot of the foreign inflows that were seen in the FII instruments, which is, of course, again, keeping the market up. But I do feel that there is one factor which a lot of us are missing, and that is actually AI. And what we find is that, the adoption of AI may be increasing in India, but the reliance on AI is not as high in Indian corporates as it is in the Western world. And with the fears of a global AI bubble sort of bursting, India offers a natural hedge at this point to a number of Western markets, and people are actually hedging against, the global AI bubble by investing in Indian markets.
Ms. Nikor, are valuations still high in Indian markets, especially when you compare them to other markets like the United States and Japan?
So I think that the comparison when we look at the valuations has to be made a little bit differently when we compare with Western markets and Asian markets. We can see that the performance of the Indian indices versus the Asian indices is actually still a little bit lower. We know that the Asian markets are actually doing very well. We can see that even the Singapore markets are doing very well. We're seeing Japan, of course, is doing very well. South Korea doing very well. All of these are seeing a surge of foreign investment, and we know that the Asian markets overall are expected to outperform Western markets for the rest of this year. In the Western markets, on the other hand, we're seeing a very different trend. We can see that the US markets of fluctuations are very, very high because we're not sure where we're going to land on the different tariff policies and on the trade policies. And the Indian market has performed and corporate earnings have performed despite the fact that India is dealing with one of the highest tariffs imposed by the US over the last almost 6 months now. And yet, despite that, Indian corporate earnings have performed and have shown that they are only growing. So therefore, India offers a very good hedge today in the global scenario. And UK markets, of course, we'll see what happens because, the budget has just been announced and a number of millionaires and billionaires might be leaving the UK and moving to other parts of the world, particularly Asia. So we have to see how markets react to that.
And talking about markets, and finally, Ms. Nicole, when markets are at a record high, there's usually some FOMO buying. What is your advice for retail investors, very quickly?
So I think I will refrain from giving too much of investor advice, but just to say that, go for those sectors where we can see real growth. We can see real growth coming into the transport and logistics sector. We can see infrastructure sectors are doing very well and consumer goods are also doing well. So I would say that, these are good sectors to go into and have a bright future.
Ms. Mitali Nicole, thank you very much for your time and for talking to WION World is One today.